Welcome to the fascinating world of financial markets, where the dance between buyers and sellers is written in the language of price. If you have ever felt like you are just guessing which way the market will move, you are not alone. Many traders spend their entire careers chasing lagging indicators, missing the real story happening right in front of them. Today, we are diving into the legendary work of Steve Nison, the man who brought the ancient wisdom of Japanese rice traders to the modern world. His book, Japanese Candlestick Charting Techniques, is more than just a guide. It is a map of human psychology, the visual language of the market. Imagine you are a rice trader in 18th century Japan. You do not have computers or complex mathematical formulas. You have only the price of your goods and your observations of the people around you. You realize that price is not just a number. It is the manifestation of greed, fear, and hope. Nison explains that a candlestick is a narrative. The rectangular part, the real body, tells us the struggle between the opening and closing price of a session. If the body is filled, the sellers won that round. If it is hollow, the buyers took the day. The thin lines above and below, the shadows, show us the extremes, the moments of intense panic or unbridled optimism that were ultimately rejected by the market. Decoding market psychology. Why do these patterns work? Because they are the embodiment of crowd behavior. When you see a hammer, a single candle with a long lower shadow at the bottom of a downtrend, you are not just looking at a shape. You are seeing a moment where sellers pushed the price down, only for buyers to step in and push it right back up, showing that the sellers have exhausted their strength. This is not some magical prediction. It is a live account of the battle for control. Nison teaches us that by reading these shapes, we can anticipate shifts in sentiment before the rest of the world even notices. Context is everything. One of the most important lessons Nison leaves us with is that patterns cannot be traded in a vacuum. A doji, where the open and close are nearly identical, might mean nothing in the middle of a sideways market. But find that same doji at a significant resistance level after a massive rally, and you are looking at a potential warning sign that the trend is about to lose its breath. Nison warns us repeatedly. Candlesticks are not a replacement for traditional analysis. They are a partner. They provide the early warning system that tells you something is changing. But you must use the rest of your toolkit, support, resistance, and trend lines, to confirm the story. Integrating Eastern and Western wisdom. The real power of this approach lies in the fusion of worlds. Western technical analysis gives us the structure, the long-term trends, and the target levels. Japanese candlesticks give us the precision timing. Think of it like this. Your Western technical tools are your telescope, helping you see the distant destination. The candlesticks are your compass, helping you navigate the immediate obstacles right at your feet. When you see a bullish engulfing pattern right at a major moving average or a key support level, you have the confirmation you need to act with confidence. It is about synergy, not selection. The path to mastery. Nison is very clear about one thing. This is a skill that requires patience. Many beginners fall into the trap of thinking they can just memorize shapes and start printing money. But real trading is about discipline. You must study, you must practice, and most importantly, you must be willing to learn from your mistakes. Candlesticks show you the truth of the market, but you have to be the one to interpret it correctly. Stay grounded, keep your risk management tight, and remember that no single candle is a guarantee. It is just one piece of a much larger, beautiful, and complex puzzle.